same action that you're having in gold now is playing out in silver in terms of distrust of fiat currencies and the accumulation by banks and investors is slowly happening. But the biggest driver in silver has not been the investment side. It's been meager. It's like when it really turns on, then let's watch things happen. Right there, it's not. If you look at the numbers, investment isn't there. A ETF hasn't been there. It's now in. Now ETF is having an impact. Go Sprott Physical, please, for obvious reasons, because it seems there might be some double counting in the LME and COMEX and the regular ETF. Um, but it's been the industrial driver, and so watch the inventories, the available inventories in the LME. Right, it's just disappearing.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on an historic day in the silver markets. As you can see, our spot price as of 10:27 a.m. Eastern Time on Thursday, October 9th is above $50 indeed. It's been a wild morning. You can see that the spot price got up to 51.24. Broke through 50, quickly surged above 51, came back in, is back above $50 right now. What is particularly interesting is that as this is happening, here's the futures, which normally trade over the spot price, and they had rallied quite a bit too. You can see they got up to a high of 49.96 there, have come back in. Although, again, if we look here, you can see here's the spot price, 50.14, and the futures 48.37. So it's widened out even further. It was over $1 earlier this morning, and that looks like that's geez, almost a buck 80. Goodness. So all the things that we've been talking about the silver supply situation in London, seems like it's coming to a head this morning, aside from the fact that we don't know what could happen next yet. Basically, a much higher price in London than even what you're seeing on the COMEX. Will be interesting to see if some of that metal starts going back. But either case, just wanted to say congratulations to everyone who has been invested in silver or following this story for so long. It turns out you were right. So congratulations. And fortunately, I recorded a conversation with Ian Harris yesterday where we talked about a lot of these things. Amazing how much things change in just a day. It was either Tuesday or Wednesday where silver was down $1. It was down last night as it was going to sleep and then has surged higher. So who knows what will even happen between now and the time this airs a couple hours later. But exciting day, and here is the call where we dig more into these silver issues that are driving this. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics in a historic week in the metals markets. A little bit speechless.
Unbelievable.
Here with my friend Ian Harris of Copper Giant, and who's also a big silver investor, gold investor, and plenty to talk about because, Ian, we saw yesterday the gold futures finally crossed the $4,000 mark. They
And
didn't they
kaboom.
didn't stop, as you can see. That I mean, it's just stunning to see up another $60 again today. I think it was either Monday or Tuesday where they were up $75. I mean,
You
goodness.
remember when a 1.5% move in a day in silver was just whiplash fast and we were blown away by a single day like that? And now it's multiple days. The acceleration is amazing. It's also hitting mainstream, right? Definitely hitting mainstream. People are seeing that it is a vote of distrust, really, in many ways. That people are seeing gold price as a concern of what it means for the overall trust of the where things are going. Obviously, something that's been on our rhetoric for a very long time.
Yeah, and it's fascinating, Ian, because this is all happening where I think for people like you and I and many of the people who watch this show, we've been seeing a lot of things build for a while. And, maybe if you look at economic growth in real terms, you could say we've already been in a recession, but for like the mainstream crowd, I think like their world is still relatively normal. You haven't had an issue with the debt yet. Powell's like, well, maybe the economy is not as strong as I thought, but it's still strong. Yet we'll lower interest rates to bring down inflation, which remains over their mandate. So I think really the main driver, especially in this past month, has been that they are cutting rates faster. I don't think the markets have fully priced in that Trump's going to get someone to even outdo that. But nonetheless, here we are. Silver has been pretty volatile, which I think in some
He's normal.
ways you should expect when we get near 50. Had one day last week down $2, has gone back up and down, and here we are today at 48.44 on silver. So what are you seeing there?
So it's the same thing. You can tell that there's some capitulation from long-term holders that go, we got to this price in the past and it's a mental block. You could see it when we passed by 40. Remember that collapse the second it touched 40? I don't think that was Mr. Slammy. I just think that was a lot of people had a lot of put that price in as recovering some of those, getting some profit back over long-term holdings, and then it just bounced right back. Like it just screamed. People took that as a buying opportunity. And silver, we really have the two. Yeah, the same action that you're having in gold now is playing out in silver in terms of distrust of fiat currencies and the accumulation by banks and investors is slowly happening. But the biggest driver in silver has not been the investment side. It's been meager. It's like when it really turns on, then let's watch things happen. Right there, it's not. If you look at the numbers, investment isn't there. A ETF hasn't been there. It's now in. Now ETF is having an impact. Go Sprott Physical, please, for obvious reasons, because it seems there might be some double counting in the LME and COMEX and the regular ETF. Um, but it's been the industrial driver, and so watch the inventories, the available inventories in the LME, right? It's just disappearing. There's people out there going, there's 3 weeks left. And when you hit a physical wall, right, that's the true silver squeeze. So it's I think the price more reflects the just basic supply and demand. Right. And we had a conversation earlier. It's that the traders, the paper traders exist in all markets, right? So yes, silver is manipulated like all markets. Maybe silver is more manipulated than the other markets, but they've allowed to play this game of chicken a lot closer to the end, right? Because of the way trades happen, electronics has high speed trading, et cetera, et cetera, right? They've been able to play the game longer, and now they're letting the rain. They're like, okay, we're close enough. Let's get out, let's unwind. Slammy allowed us to unwind a few times, and now they're letting nature play out. The physical supply, I think, is playing out, and so that's what I'd watch. Right, watch that. Watch those real inventories, because if we have a threat, even a small threat of delivery problems, because it's a real industrial demand. Um, I wouldn't be worried about historical levels, right? Because we're not at historical on if you take inflation into account, we're nowhere close. We're so undervalued. We're so undervalued. So I think that things will really take off. That's my opinion.
Well, I agree, although I would not say it's your opinion just alone because you have a handful of people who are agreeing. Daniel Galley, who we talk about on here quite a bit for TD Security, said 4 to 7 months at the current ETF pace of when you would have an overt issue in the London physical market. And Ian, it's quite interesting. Now, this kids at home, this is not a perfect metric, but a rough gauge. You see here, silver futures at 48.47. Spot price, this has been widening. We're in backwardation, and it's exactly like you were just saying because we hear Robert Gottlieb, who used to be at JP Morgan, continue his posts every day. The tightness is worsening in London. You talked about the available inventory, how a lot of it's being held for the ETFs. That's already in the danger zone. And that's not even accounting for if some of that London metal is offset by the COMEX hedges the banks hold. So we're seeing it happen now. And this was about 10 to 20 cents yesterday, and it jumped up to 50 cents today. So everything you're saying, it's not what could happen one day. And it'll be interesting to see if the London spot price gets high enough that you start seeing some of that metal that went from London to the COMEX go back over to London. But we're seeing it happen now, like you said.
Yeah, and so we got it's a weird world, right? Remember when copper on the COMEX, anybody looks on their Apple, and they put in their HG equals F, right? They're looking at the COMEX futures price for copper. It was at $5.80, but across the ocean, right, it was sitting at $4.80. I'm making numbers up, but the arbitrage was huge because there was a fear of tariff. We've kind of taken away the specter of tariff in copper, at least on refined for 2 years, but that tells me a massive amount, but also on refined gold. But you say there's still a specter out there. What does this really mean for silver? Does it really also apply to silver? What's going on? And we're playing these weird games where we have this arbitrage between actually having it physically in a nation also has a premium, right? But you see movements, and I see it. It looks like you're still seeing movements where there is a priority over the location, right? And so people have been talking about this difference between the Shanghai and the LME in terms of silver price for the longest period of time for the same reasons, right? It's the paper market is becoming less and less and less the real market, right? It's not the real market, and it's just continue just to be a weird game that the world is playing, but it might be coming to the end.
Yes, and Ian, I don't know if you're doubling as maybe a Bloomberg reporter in your spare time. And again, I'll mention you're involved actively in both silver and copper, so and especially the way those two markets are tied together gives a unique perspective that you share. And here we saw on Bloomberg, this came out just on Tuesday. Copper touches new high with mine supply disruptions stacking up. Now, Ian, you haven't been the only one to say it, but who knows? Maybe Mark Burton and Edie Spence saw one of the last calls you did on here where you talked about exactly that, and here we see it happening. And interesting here. Copper is up about 23% this year, with mounting worries about supply more than offsetting sluggish demand in major industrial economies. Interesting on one hand, I thought the economy was soaring. Why are we using less copper in the middle of the green agenda? Or why would the demand be lower? So I think that somewhat speaks to the strength of the economy. Yet, despite that, the supply concerns that you've described in detail having their impact here.
Yeah, the tightness on the concentrate market should have been a big red flag for everybody when you started seeing negative treatment charges. Smelters were literally paying to buy concentrates. It should have said, there's a problem going on. So just it took only a couple little bumps in the train. Again, you could see the traders are looking more of a short-term game than the long-term fundamentals. And you can even see it on this chart. Well, this doesn't count because this is where we had the threat of the tariff. But if you look back, just if you had that chart just went a little bit back, in 2024, we had this big run up of copper price because there was fear over the long term fundamental. And then the world became more short term focused. We had elections with Trump, we have tariff threats, we had all these other mechanisms that were taking off. But we had a big run in 2024. You could see it right there on that. Kind of see it on the chart where we hit a high there in 24, and then it just started going like this, right? Then we have the tariff threat, and so this is a COMEX future, I'm guessing, right? We saw this big run up, and then the collapse when he goes, oh no, 2 years on the refined copper, and it collapsed again. But now we're getting back up to if on the LME side, to one more time, we're getting back to historical prices in copper. The real copper price,
And
right,
this is
is
the
is getting
LME.
historically high.
I'm sorry, I just want to say we do have this is the LME and we were looking at COMEX, so we have both. And I was hoping you could explain to people, which you've touched on, where here you look at the COMEX chart and you see that big spike up and down based on tariff policies, which you didn't have in London, and which makes sense, but perhaps you could just break that down again for people so they're clear on the why that happened like that.
Yeah, so I almost say I was happy when everybody was looking at their cell phone and copper was looking like it was $5.80 when the LME wasn't. Obviously, this is a price per ton versus a price per dollar, but you can still see the action. But it was because people thought there was going to be a tariff on refined copper, right? Which means that's what you get after it comes out of a smelter. But Trump then came out and announced, no, 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 we're going to put 2 years on refined copper, and we're going to put it only on secondary products, right? Wire, cable, bars, these secondary, because it was very simple, right? Um, that if you want to build a manufacturing industry in your country, you need the raw material. And if you put a tariff on the raw material before you have the ability to make it yourself, then people are going to leave your country and make it somewhere else. I mean, it was that. So, but there's a bigger one in there for me. It says you got 2 years. So that means that Trump administration is saying you have 2 years to build smelters in my country. You have two years to build not mines but smelting capacity because smelters are what provide refined copper. And I want to build up the refining so that we can have the start of those production chains. And something that we were also talking about at the beginning of this conversation is, the term copper is the new oil is playing out today, right? We're seeing the economy is a little bit stressed, right? But copper is still going strong, where if this was 10 years ago, it would actually probably be oil price. So I also think oil is going to be, but we're going to start seeing more emphasis of on copper, which is it's obviously a much larger market than even gold and silver can absorb, right? So it's the bigger overall commodity that can absorb a lot more of when people want to get back to fundamental economies. And because so much of the world's future economy is based on copper, where existing is based on oil, that's why we have these shifts when we get around. Well, AI is fun, but it's not real. Bubble bursts. Let's go back to what the world's economies are actually based upon, and so that's all playing out in front of us. I would say that the same people that distrust fiat currencies and believe in gold and silver for those reasons, right? That the future economies are not driven by paper either. They're driven by metal, and that metal is going to be copper.
Yeah, well, we're seeing it play out. It's fascinating to see the similarities between silver and copper playing out simultaneously. So appreciate what you shared there, Ian. And one last silver note here. Did have this article from Bloomberg on when silver will top its Hunt Brothers high. And I love the last part because I've seen a video where at one point they mentioned $52 silver and they're showing the guys on the trading floor. And I'm thinking, where does that come from? And they actually talk about here the high on the CME was 50.35, although intraday on the Chicago Board of Trade got up to 52.50. So a little historical note. And Ian, who knows, maybe we'll break all of those soon enough. Although,
My money is we're going to break it for two reasons, right? That in 1990 it was based on a speculation created by the Hunt brothers. Well, and it wasn't just the Hunt brothers, right? They were just a part of it. They were the face, right? This time it's called industrial demand, and they don't give a crap about speculation, right? They need it, right? And we have and I would get away of overly focusing on, oh, it's the energy transition, it's to clean energy, it's to all this piece, which I think is an important base, but you can accelerate or decelerate based on, how the world economy is going, that process of conversion, or you can just go, I don't even care about it anymore, like Trump has done, right? But there is a basic in industries that require a massive amount of silver in electronics, all the new technology, which is the new economies, right? You can argue whether or not you like AI, but it's going to happen. It's happening, and then whoever wins it's a race, and you got to win the race. If you don't win the race, if you want to put your head in the sand, fine, you can, but somebody else is not, right? So the AI is a real thing, and it's super super important, and there is where silver and copper are extremely important, and people cannot lose the race, so they're going to pay for any price. The other one is solar panels. Although it's associated with green energy, the difference between solar panels is that you can put in solar panels extremely fast. You cannot build a gas plant and get a permit for a gas plant in less than 2 or 3 years. For a coal plant, forget it. It's 10 years. For a nuclear plant, I don't know if it is possible, but you're still another 10 years. So the only way you can get quick power is through solar. And that is why solar demand is taken off. It's not because, oh, we're going to save the planet. It's because you can put it in fast and it's just as cheap as a gas plant nowadays. The cost per kilowatt hour in both capital and OpEx are about the same. We've passed that line. It's cheap to put in and you can get it done fast. So you go, oh man, I can't put in my data center unless I have some power. Let's put in some solar panels, right? It's just an easier decision. We face that in mining all the time, right? How long does it take to get power to a site? It's why a lot of mines run on diesel power in the past, even though it costs 30 cents per kilowatt hour. It's because building that power line would cost a fortune. It would take too long to get there, right? So you can't have it slowing down your economic process. So those are demands that are uh, ignorant, um, agnostic to price, right? Because growth is the only thing that matters. And you see that playing out right now. Growth is the only thing that growth in a certain sector. And because we're tied to that growth, we will continue to perform and blow through a number that was just squeezed momentarily. We're going to go through a big squeeze, and it's not going to be a squeeze that ends. I'm really curious how this plays out because it's hard to incentivize quick new production, extremely hard, right? I think the next real demand is going to come from grandma's candlesticks. At what price does everybody start rating their cupboards? Right, is going to provide a little bit of supply, but you're not going to have new mine supply coming on super quick. And then the second part is at what price do people actually care to say, let's find something else besides silver because it's just a teeny little bit in every one of those circuit boards, right? OpenAI just put in a $100 billion order. Yeah, who cares? At what point does silver price have to hit before it affects demand?
Well,
So it's
I wonder if we may not have hit that, maybe not as much silver specifically, but Ian, I know you've been following the Trump administration. It's like they're going shopping in the mining industry now, a variety of different metals. We've seen silver listed as a critical mineral. Did they add copper yet as a critical mineral?
it's on the USGS draft list of critical
Okay.
metals, which normally historically 99.99%. I don't know of a case where they just don't accept that and ratify it. So both copper and moly, I'll do a little bit of a moly molybdenum uh, wink there too, since Macoa is probably one of the world's largest moly deposits, undeveloped moly deposits in the world, is was also added to that list. Um, you know, there's there's a lot going on in the background, and this, they might be good poker players, but they're showing their cards, right? This is the way. This is where the worlds are going. It's not just the United States. The United States is just playing catch up. It's playing catch up, right? That you have whole delegations going to Australia and not talking to a couple companies, talking to 30 different companies or something like that, right? This is getting serious. This is getting really, really, really serious. That it's going to be a fight over natural resources. And guess who wins in a fight over natural resources? The assets. And so that's why I've been having more of a smile on my face. It's playing out in gold. It's finally hit the equities. It's not uncommon to see 200%, 250% gains in gold equities that haven't had major catalysts just because they're good assets. They're finally getting properly valued. You see 100% valuation change in silver, including a company I run, going from begging for dollars and to raise money to stay alive with a good project to raising money in with two hands that are long-term investors in about a month. And now copper, it is starting to show like we're up 50% in just a month, right? So copper is looks like it's having its day.
Yes, and Ian, as you mentioned, you are part of Copper Giant, which I think all these conditions you just described, nice place to be in. And anything you can share? I've heard that you were on the receiving end of a phone call that speaks to the dynamic you were just discussing.
So I'm a U.S. citizen. So I was born and raised in the USA. Went to Virginia Tech as a mining engineer. Graduated in '97. Worked in the coal mines of southeastern Ohio to pay for school and work through school. And started early in a Sarco's management training program and went out to Arizona, mostly because I wanted to see sunshine. I was sick of working in darkness. Um, and since 1999, I have been working in South America. That was the first time I went to South America, and most of my career after that, there was some stints back in the US and in Saudi Arabia for a few times, but most of it's been in South America. And in that entire time, I'd never gotten a call from the U.S. Embassy. And I think you made a self-fulfilling. You told me, hey, JD is going to be in our last JD Vance going to be calling you up. He's going to say, Ian, tell me about your copper project. And we giggled and we laughed. And then literally that week we get a call that the embassy wanted to get more information. It was a very nice conversation, but it was an information gathering session, right? But the U.S. Embassy caring about a Canadian company, what we're doing in Colombia, for me, it's like that probe at the beginning of the Empire Strikes Back, right? That probe that I think Hans shoots and blows up, right? And or no, no, I'm getting it back. Well, Luke Skywalker blew up, but that's what brought the stormtroopers in afterwards, right? It was that little probe. What's going on now? Most people don't know this, but Colombia, there's a couple things. It's a major non-NATO ally, so it's got the highest ally status after a NATO ally, and that puts it on the same stage as Japan or Australia, right? So it is a real ally of the United States. There's tension right now between the two presidents, but a lot of that is, man, we got elections coming up in May. This guy can't run again, and so we feel that there's going to be a change. You could see the United States exerting pressure on South America. You can see it happening in the flotilla that is out there in front of Venezuela right now. There's this pressure, and it's saying this is our space. Stay away from our space, right? So I think that bodes. You kind of see things. The other thing, one of my biggest complaints and is market gets it wrong in copper on what projects get built. They get it wrong, right? And I can say that from a guy who's seen a project get built, and there's only been by 5 or 6 built big ones in the last 10 years. And another is my director, Ernie Mast, was CEO of Cobre Panama, which was one of the others that was built. But if you look through the list of every single project that got built over the last 6 years, right, until Friedland got involved in Africa, nobody thought that those brines were ever going to get built. They got built. Cobre Panama, hell no. Low grade, gigantic, huge capex, not going to get built. Got built. Ecuador, never going to build a mine in Ecuador. Forget it. It's in the Amazon jungle. Are you kidding me? Got built. Right? You even have Las Bambas, right? The big boys walked away from it. The Polish and the Chinese came in, built it, right? It's every single one of the stories they get wrong. And so it's saying we're using the wrong fundamentals on how to value. I believe Macoa in Colombia is going to get built because all the indications are we're doing it the right way. We know how to do it. We're building the what's actually really important, right? We just put out news that we finished our prior consultation with Condagua, Inga de Condagua, which is the only First Nation or indigenous group that is close to our project. This is huge because in Colombia, right, they're very autonomous. They have they can apply their own destiny kind of thing, and they have a lot of authority and control over the areas they work. And we're probably the first that I know of, and I will put it on. We are the first exploration company that has finished a prior consultation in the exploration phase, right? We did it to build a relationship, this great relationship that will take us forward. These are the little signs of things we're doing now, where a lot of projects wait until you have the feasibility in place, and you start doing these conversations, these negotiations, and we're putting these pathway because the goal here is this will become a mine, right? These are the pieces that you put into place, which means building strength for what happens today, but with a vision of what's happening years in the future. And a lot of times the market focuses on short term. They talk about jurisdictions. Like I love it, and I'm not saying that this is a bad thing, but Argentina is the great jurisdiction. They haven't built a mine, right? US, Canada, they haven't built any mines, right? Though none of that list of the copper mines were in those. Now, will they, I think, build mines? Yes. But it really is about the team. It's about navigating it. It's about the project. It's about economics, right? There's a big difference between a deposit, resolution is finally getting all the support to move forward. And we will not see an ounce of copper, pound of copper out of that project for at least 7 years, even if it started building today, right? Where Makoa, right? We're building the support. We know what we're doing. We're navigating it well. We have a near surface resource. There's nobody lives in the area. We have two power lines that run right by the project, right off of near airport, has a port that we can go drive to. Mirador was the cheapest dollars per pound, new dollars per pound in copper in a greenfields project in the world when it was built, right? And we still had to build a power line and we still had to build at least the warehouse for the port, right? And a lot of bridges too, and a big, big bridge. We don't have those types of obstacles at Makoa, and these things will come out to play. I do believe that market is getting it wrong, and it will catch up. And it looks like it's starting to catch up now. We're moving forward, getting things done, and I think the world is slowly waking up that copper is inevitable. We need more of it. The big guys were willing to pay more for it. This is also big news, right? We continue to put out showing that this project, people don't realize that it's getting a lot bigger. We did a resource on it because it was inherited from B2 Gold, continue to demonstrate how this geology shows that the overall spatial footprint of this project is getting bigger and has what you love to see, new high grade zones. Right. If you look over to the east, we
Nice.
continue the extension of the Breccia zone, which is one of the higher grade zones, which is where we get a lot of the high moly. And if you look at that little old hole, it kind of showed dead in that area, but it just missed it. So this hole confirms it continues north. That MD049 shows how that continues north. And what's nice is people see it, we're drilling off of a ridge line and they don't realize that we can come down lower and we're going to start gaining the elevation. That's why you see these new potential drill hole coming from a lower elevation, being able to pick off this new northern extension where it says 1680 MASL, which is the sea level. And then on the other side, right, we've detected this is a new high grade zone. The MD050 is a brand new high grade zone. Why is high grade important, right? You see this center section in between, you see all these long lines. That's the nice high grade. High grade is important because it drives economics, right? Especially when they're nearer to surface. But we get the best of both. About 40% of our copper is all in these high grade zones, and we get around 60% is all in the disseminated. So we see mineralization. Even in these holes that look kind of dead, there's still copper within that hole on the top section. It's really throughout. So finding new areas, this thing is just growing in size. It's growing. And so Makoa is getting a whole lot bigger. What I get more excited about is the one we put out last Thursday. I'm also extremely excited about our news that came out today, Thursday, October 9th, but that talks about the long term. But in terms of dramatically changing the economics of a project, we were in our current resource, we were using a 75% recovery for moly. We knew and we felt that moly recoveries were going to get a lot better. And we saw consistently 95% plus recoveries in our moly, 97 up to 97% recoveries because it's free. It was by itself. It wasn't connected to other stuff. And what was happening is this is a 10 million year old deposit that was, sorry, a fertile time that happened over 10 million years. Right. And if you look at the other Jurassics, they're normally 2, 3, 4. This is 10 million years. Other 10 million ones are things like Rio Blanco, Chuquicamata are these big, long ones, which also gives us very excited. You have these multiple pulses, and so copper was moving around, but the moly was staying in place. So why is this important, right? Well, who cares about the geology? Why is it important? Because now the last time we did a resource estimate, the average 3-year trailing average of copper was $3.30 and moly was 10. Today, copper is $4.20, which is a nice run, but moly is $25. Moly is going through the roof because it is so important in high quality steels. Right. And the new world requires more higher quality. So it's more and more. As copper deposits are lowering their grade, they stop recovering the moly because it's too hard. And so looking at a higher recovery at a higher price, we're probably going to go from, you know, where Molly is going to be probably a third of the value of the project. That's a nice kicker. It also says it's not a fake one. It's not like one of these companies where you see this calculation that has all these little metals that they're trying to calculate to make their price go up. We're going to recover this Molly, and it's showing that we're going to recover it, right? It's going to be something that's going to be a part of the economics and an important mix, and really I think push it over that 0.5% copper equivalent grade, which is important. And that compares to projects that you see, they're like, hey, look at that high grade. And you go, it's 800 meters underground, right? This is near surface. Like all these things will start clicking and market will start recognizing, understand the importance of this project. United States needs new smelters. Colombia is a partner. This is going to be a low cost new mine, and everything is going to start aligning on this project, and it's going to, it's this is a project. How could I say it without getting into much trouble? Is what I'm trying to figure out, right? Mirador sold for $690 million 10 years ago. And it's about a similar size today is a similar size, and Macoa is only going to get bigger. So it just gives you an idea of where we're going to go from our current valuation. I think our market cap today is $35 million. But copper will get its day, and it's coming very, very soon. And this project will get the valuation it deserves.
Well, Ian, it sure seems like you're in a right place at a right time. And then on top of it, it's great to see the progress that you guys have had, which you need all those parts, but when you have them all together, it's exciting. And then add on a lack of copper in the world that has Bloomberg scrambling. What's going on here? And who knows? Maybe JD Vance was watching some of your other interviews we did here today, and you laid it out clearly enough that even a politician could understand it, which is, I might add, not easy to do, but speaks to the management quality of Copper Giant and Ian Harris over there. So
Yeah, yeah. Maybe it's your following. Maybe we should say JD Vance a few more times because he just likes hearing his name, and then we'll put the idea. But the other big one is United States has a big moly processing facility that is now importing and having to scramble where to buy that moly from. And so Macoa would be a perfect project to kill two birds with one stone, a really big copper project in the backyard and a very strong moly stream that could help with that. What do you think you use very high quality steels in? You know, the big one is obviously aviation, and high tech aviation is the big one. Turbines and wind turbines, which aren't Trump's favorite, but really fast planes and stealth planes really are. So this is where this metal gets this why moly is so important. It's been considered a critical metal.
well, I'll tell you what, when JD calls, invite him on the show. We'll do a three-way, and we're big fans of him over here, especially his campaign speech of how he was going to make sure a dollar was worth a dollar because we don't want Kamala Harris to inflate the heck out of the currency. And he forgot to mention that everyone on Trump's team thinks the dollar is overvalued, yet neither case, Ian, these are the some of the factors going in your favor. And perhaps in wrapping up, can you just let people know the best way if they have questions about any of the things that you shared here, which was a lot of great information, or the Copper Giant project? I know you like to talk with people on WhatsApp and any ways
That's
to
true.
get in touch.
Yeah, on the end of pretty much I think every single one of the news releases is my phone number. I use WhatsApp. I live in South America. I live in Medellin. So that is the easiest way to contact me. It should be right there at the bottom. Let's find it. A little bit up. No, a little up at the end of the press release. There we go.
Here we go.
It's the formatting. We have a formatting problem that we have to fix. But this 303-956, that's my phone number. It works. I don't always answer it immediately, but I try to answer people when they send me a WhatsApp. And email's a little tougher because I blink and there's 1,000. But I like to having those conversations. I appreciate every single one of the believers in this project. I think they're finally going to start getting rewarded. They've been rewarded. We're up. You know, the stock is performing well over the last month or two, and I think it will continue to go that way. So that is the best way to contact us. And we're working on updating this website, so it will also be, a better, more interactive for shareholders to see what's going on the ground. So we have a lot of great news going on. Yeah, hit that 2-month chart, see how it's going. Um, Not 30. Yeah, see, you can see the improvement here, right? We're really starting to hitting off this bottom and had a really strong performance over this last period of time. Plus, there's the copper narrative happening again.
You
So
got
I think that
that
finally things are all in the right direction.
50% in a month there.
Yeah,
So that's quite a move that you guys have had.
yeah. And I think the fundamentals have been there. Most people say, "What are the catalysts?" I think we put the catalysts in place. What we need is a little momentum in market. Uh, we're drilling. Restarted the project. We have, the amazing results, some of the best drill hole results in the world. We really just need a little wind in the equity markets for copper. I think we've seen it in gold, we've seen it in silver, and it's just floating over. You're starting to see more generalists come in. There's more money pumping in. I think that copper is a more long-term focus. It's a nice balance between the strategies we're applying in gold and silver. So it's a huge complement, and it's the same under, you got gold, you got copper, and you have the silver in between, which is a little bit of the both, right? So it's just a natural transition between the three different commodities. I think the future is lined with metals. Our future is definitely lined with metals.
Well, seems like the Trump team and several other governments agree as well. So, Ian, I sure appreciate the update. It's great getting your perspective because you see a lot of these things close up. And congratulations on the success. And I will have that number if you'd like to contact Ian on WhatsApp or through this site for Copper Giant. And I guess go get out there, keep an eye out for JD, and we will do this again soon, my friend.
Thank you, Chris. Always, always, always enjoy our conversations.